Babu is the owner of B Electronics Enterprises, where he sells all kinds of electronic devices, such as television sets, smartphones, tablets, laptop computers, and other gadgets. He buys the products directly from the manufacturers, who supply them on credit, and then sells to his customers. On the 3rd of March 2021, he sold a smartphone for 105,000 naira to Zara. This sale was made on credit. He therefore issued an invoice to her before recording the transaction in the sales daybook. On the 10th of March 2020, Zara paid 102,900 naira in order to settle her debt. Wait a minute, that was not the amount she owed Babu. Let's take a closer look at the invoice that Babu issued to Zara on the date the sale was made. Apart from everything that was shown on the invoice, there was a settlement term at the bottom of the page that says 210 net 30. This means that if the customer settles their debt within 10 days of buying from Babu, they are entitled to a cash discount of 2%. However, the total credit period for them to pay is 30 days. In Zara's case, she bought an item worth 105,000 naira and then settled her debt within 10 days. Therefore, instead of paying 105,000 naira, she was allowed to pay 102,900 naira. The reduction of her debt by 2,100 is calculated by multiplying 105,000 naira by 2%. The result is then deducted from the amount that was owed. We already know that upon receipt or payment of check or cash, the transaction is recorded in the double column cash book. However, if there are cash payments or receipts that involved discount, they are recorded in a 3-column cash book. A 3-column cash book is just like a double column cash book, but with an extra column for discounts allowed on the debit side and discounts received on the credit side. Babu will record the receipt of cash from Zara by debiting the cash column with 102,900 naira and also record 2,100 naira under the discount allowed column on the debit side. Babu also receives similar incentives from his suppliers when he settles his debt on time. When this happens, he records the payment on the credit side while recording the discount received under the discount received column. A full illustration on postings to the 3-column cash book will be done in future lesson. In summary, a 3-column cash book is like a double column cash book, but with extra columns for discounts allowed on the debit side and discounts received on the credit side. It is prepared when a business gives discounts to encourage customers to settle their debt promptly, and when the business also receives discounts from the suppliers when settling payments for purchases. It is essentially the combination of cash, bank, discount allowed, and discount received accounts in a particular book. A detailed explanation on discounts is needed, and that will be the focus of discussion in another lesson. See you there.